All right, so let's go through the Chapter 24 homework problems. Okay, the first one is a payback period, and there's unequal cash flows, right? So you'll enter the cash flows here, get the cumulative cash flows, and then determine the payback period. And you can look on page 397 to read more about this. Problem 2 is the net present value, and again, unequal cash flows, and we're comparing two different investments. Okay, so you'll put in the cash flows, and then you can use the tables in Connect. Okay, so since we're looking at single amounts that you're getting in 1 year, 2 year, or 3 years, you want the present value of $1. Okay, so you don't need to have tables in front of you when you do the homework or quiz or even the exam. You should be using for the quiz and the exam, you need to use the tables. Okay, so that's how you get those. The initial investment, they want you to enter that as a negative. I got it marked wrong. Not on this problem, a different problem, because I didn't enter it as negative. Okay, the profitability index. Okay, and I think I mentioned the net present value. You'll look on page 400 to 401. The profitability index is on the bottom of page 401. And I'm getting the drop down box there. And then you'll tell which investment you should use. Okay. Then the next problem 3, you're going to start off by computing the cash flow. So they've given you the income, and it's going to be the same every year. So we're going to have an even cash flow on this one. If you look on the bottom of page 396, Exhibit 24.3 is showing you how to go from income to the cash flow, right? The difference being that there's no depreciation, right? Depreciation is non-cash, so we will not have depreciation, but you'll have the sales. That's a cash inflow, cash outflows for materials, and your expenses. That's how you'll get to your cash outflow. And then you'll use that for requirement 2 when you do the payback period. So now we've got the equal cash flows. So you can look on page 435 for the formula for that. Requirement 3, you're going to be doing the net present value with a salvage value. Okay, so look on page 401. And so you'll put in the cash flow. That's going to be a series, so it's really an annuity. So the present value factor will come from the present value of annuity, PVA table. Okay. And then the salvage value is a single amount you're going to get at the end of the life of the project. And so you'll go to the present value of $1 for that one. And don't forget to enter your initial investment as a subtraction. Okay. The next one, internal rate of return. So you can refer to page 402. Is this the one where we had to divide? I got it marked wrong. I forgot to put in the divide. Okay. Not marked wrong. It was incomplete. Okay. So again, page 402 for that. And again, we're going to want to go to the PVA table to look for the factor we get. And then finally, our Excel one is very straightforward. It's going to be another net present value with uneven cash flows. And this one is super straightforward. So it's like problem 2, except they've given you the present value factors, and our Excel formulas are very basic. But again, that's page 401, Exhibit 24.10. They entered the initial investment for you as a negative. And so very straightforward. So I don't think this assignment will take you that long. There's not a lot of repetition. So you're probably going to want to go back and do this in study mode, after the due date to get that extra repetition, to practice a little bit more.